Hello, everyone. This is Nick Rudolph. I am the Baltimore Regional Director with Maryland Capital Enterprises, and today we are going to be talking about cash flow projections and access to capital. This is an exciting presentation because we're going to be talking about a few different things. First, how your cash flow projections flow from your business plan. Then we're going to actually do a cash flow projection. And then after that, we are going to talk about how you access capital from a CDFI. But before we get started, I would like to just let you know a little bit about who MCE is. So we're Maryland Capital Enterprises. We are a CDFI, a community development financial institution. A lot of people think of us as nonprofit banks, but we're actually much more than that. We offer free services to clients, whether or not you are applying for a loan. Things like one-on-one counseling, webinars like this one, occasional classroom sessions, all kinds of fun things. We are also a women's business center, which means that if you are a woman-owned business, we have got some extra services for you, so you definitely want to check that out as well. We started all the way back in 1998, and we started doing $500 loans in a convent in the southern Eastern Shore. We got good at it. We grew and grew and grew. We became an SBA lender. In 2012, we crossed the bridge to the Western Shore, and in 2020, we became that Women's Business Center. So if you are in Baltimore City, Baltimore County, Anne Arundel County, or the entire Eastern Shore, you are eligible for our free services and to apply for our loans. Please check out marylandcapital.org for more information, or Women's Business Center at marylandcapitalenterprises.org for more information on the Women's Business Center. So a lot of folks, do really want to talk to us about the money. So we are an SBA intermediary lender, but really we get funds from a lot of different places, the state, the feds, even private sources. And when you apply for a loan, if you're approved, we're going to get you into the loan money that it's going to make the most sense for you. Again, though, remember, we do provide that free training and counseling, whether or not you're applying for a loan. So before we get started, I want to let everybody know about the Soar and Shore pitch competition. These are the Baltimore dates, but we also will be having a separate program on the Eastern Shore. This is a great opportunity for women-owned businesses. It's a 10-week program. It is free. 5 of those weeks are in-person classroom sessions in Baltimore City or in Salisbury. And then the other 5 are one-on-ones with our amazing consultant, Adrienne Somerville of the Somerville Consulting Group. She's a veteran and she's been working with small businesses for a very, very long time. It's a really engaging program. And at the end, 3 small businesses will win cash prizes at a pitch competition. You can apply at somervilleconsultinggroup.com, or I can send you a link if you email me later. The deadline to apply is May 8th, and we will be accepting 10 folks on each side of the shore. All righty, now let's get into it. So I'd like to let you know we don't have a ton of people here today. So if you've got questions, just take yourself off of mute and ask. I'm happy to answer as we're going through. So firstly, before even starting the cash flows, we need to understand that you need a business plan. And there's a lot of reasons why you need that plan. When you think of a small business, you really want to think about it as a building. So you go downtown and in Baltimore and you see an empty lot with a fence around it that says a skyscraper is coming here soon. And then you come back a year later and it looks like not much has been done. And then you come back 6 months later and maybe there's been a little bit of clearing on the ground. And then 6 months after that, the building is up and it's full of people and it's hustling and bustling. They spent those 18 months before building the foundation, because if you build a strong foundation, if you do all of your research, you have a much better chance of success. Pardon me. So I'm going to talk about how to write a business plan specifically for getting a loan. This won't take very long, and then we will get right into the cash flows. So who needs a business plan? If you've got a business, you need a business plan. So it's going to help with a lot of things. It'll help you get grants and loans. It will help you understand what you need to do to grow your business. And it will help you show potential investors what you plan to do with your business. It is good to know that there are not a lot of grants available for small businesses right now, however. So it is that blueprint for your business. It's going to contain a bunch of things that we're going to talk about in the next few slides. But one thing I want to say before that is you really want to consider your audience as you're developing a plan. So think of it as a resume. If you're applying for a job in one field, you might highlight certain things. And if you're applying for a job in another field, you might highlight other things. Think about that the same way with your business plan. Make a general one and always change it based on who's going to be looking at it. If you're going for a loan, you want to focus on how you're going to be able to pay back the loan. If you're going for a grant, you're going to find out what that grantor is trying to do, what their mission is, and you're going to talk about how you're going to meet their mission. So really, you really want to make it for the folks that are reading the plan. So what are we looking for in a business plan when we're thinking about funding a loan? First, passion. So we want to know what drew you to the business, why are you interested in opening or growing the business you have, and why you will continue to have that interest. We want to know about your expertise in the field. So do you have education? Do you have experience? Do you have certifications or trainings? Or if not, do you have a mentor that's going to help you get there? We're going to want to see research and a lot of it. We want to know that you understand where you fit in your market, both locally and nationally. So you're going to want to understand, how much your industry is growing and how much of that is in the area that you're in. We're going to want to see contingency plans. What if you as a small business owner can't work for 6 months? How will your business continue to grow? And then very important, something that most people forget to do is an ask. What do you expect from me as the reader? I want to know that up front so that I know what I'm looking for as I read the rest of your business plan. So the first part is your shortest part. It's your executive summary. So this is sort of the elevator speech for your business. It's, let people know exactly what you're looking for, who you are, and why they should be investing in you. This is often easier to write last because you've got all that information from the rest of the business plan. But really, the first thing you want to do is have an introductory paragraph. When we do our cash flows, we're going to be doing for a fake business that I don't own called Nick's Dill Pickles. So my introductory paragraph might say something like, Nick's Dill Pickles LLC, operated by Nick Rudolph in Baltimore, Maryland, is a wholesale pickle producer. We are seeking a loan of $15,000 so that we can grow our business, buy more equipment, and help more wholesalers. Or sell more wholesale. So as the reader, I now know who they are, where they are, how their business is structured, exactly what they're looking for and why. And then you go into your story. What drew you to this business? Are you opening a assisted living facility because you saw the way that your grandparents were treated and you want to do something better? Are you just really drawn to doing hair and you want to open up your own salon? Tell us why. Then a brief description of your business, right? So you want to talk about, what you're going to do, specifically what you're going to sell, what your services are, and what is your special sauce? What is the thing that you have that others don't have that are going to drive folks to your business? That can be pricing, service, certifications, uniqueness, all kinds of things. And then we want a more detailed ask afterwards. So you say, with that $15,000, I'm going to buy, I don't know what these things are, but 2 pickling machines and enough labels to last me 2 years. So then we understand, exactly what the money is going to. If you are using it for working capital, say what you're going to use it for. So, hiring employees, a repair reserve, anything like that. The next section is your longest section. This is the marketing plan. This is much, much more than how you're going to advertise. So the first thing you want to talk about is use that research and explain how there is room in the market for you. Then you want to talk about who your target customer is. Who is your primary customer, right? So even though your salon can do anybody in the world's hair, you want to, dive down into who the folks that are going to be there the most, that you're going to be making the most money off of. So oftentimes you might say, my salon is targeted at African American women, 35 to 55 years old, who make between $75,000 and $150,000. So that way you know where you're funneling most of your advertising, and then you're probably going to catch other folks as well. You want to talk about your competition. Give them some props. Talk about who they are and what they do well. And then you want to talk about how you're going to thrive in the market with them. Again, that special sauce. You also want to think locally, regionally, and nationally about your competitors. We had this person who owned a comic book store or wanted to open a comic book store. They did two local comic book stores and Amazon.com to show that they understood that there was a lot of different competitors out there. You want to talk about your pricing. Are you high end, middle of the road, or are you a value proposition? And then you want to talk about advertising, how you're going to get the word out. And you can't just say, I'm going to do social media. We want to know exactly what you're going to be doing with that. The next section is your organization and or operations plan. So again, discuss the legal structure. Where will you be doing business? Is this home-based? Are you a consultant? Are you going to have a brick and mortar store? Is it going to be online only? What hours will your store be open, or will you be available to customers? Will you have employees? And if you do, how will they be supervised? How will they be hired? Are they going to be, W-2 employees, or are they going to be contractors? And then you want to talk about your insurance. Is just general liability enough, or do you, work with automobiles or children or food, and you need to get a little bit more insurance there. You also want to talk about your growth plan. Do you plan to expand, or do you plan to sell? Or do you plan to just have a business for 5 or 10 years and close it because you've gotten everything you want out of it? Just be honest about that. We want to know your exit plan there. Your contingency, again, what if you can't work for a few weeks or a few months? And we're still coming out of COVID, so just mention quickly what you'll do if an employee or a customer tests positive, how you'll let folks know if you're dealing with the general public. If you're online or home-based only, of course, you don't need to worry about that. Next is the financial plan. So if you're a startup business, you want to talk about your startup costs. You want to break out the equipment, the overhead, everything like that. If you are an existing business, you want to show us your financials. Give us profit and loss, tax returns, balance sheets. If you've got other loans anywhere else, let us know about that. You want to know your break even. Do you understand how much business you need to do a month to pay your bills? We're going to look for cash flow projections. This is what we're talking about next. We require 24 months, but 36 is not a bad thing to have. And then we're going to talk about your credit. So if you have an issue in your credit, this is a good place to talk about it. All startup loans, even for banks, are based on personal credit, not business credit. And in fact, all MCE loans are based on personal credit and not business credit. So if you know there's something on there that is going to be a problem and you let us know ahead of time, we can mitigate it. If it is a surprise when we look at your credit report, then it's going to become a bigger problem. You also want to discuss if you have a guarantor or a cosigner who might be willing to help you out with a loan. We're now going to go into the cash flow projection portion of the presentation. But before I start that, I just wanted to see if there were any questions on the business plan. All righty.
Hi, I just had a quick question.
Sure.
You mentioned about the fact that all your loans are based on the personal credit. What if the person has been living outside the US for a while? For example, I'm giving you an example. My husband, he's the owner of a new company that we've just created. He doesn't yet have any US history of credit reports in the US. So how would you be able to? And he hasn't yet. We literally registered a business in March. So we don't yet have history of tax returns. So what would you use to assess his credit worthiness, please?
Sure. So we would pull the credit, and there'll probably be a little bit of information on there. The credit is not the most important thing we look at. So we'd be looking at the business plan, the cash flow projections, resumes, things like that. And then if we still weren't sure about the credit because we just had no idea, we might ask for a cosigner or a guarantor, whose credit we could pull. Each instance for each individual is different, and you'll see that we can get very, very flexible with the way we can help our clients.
Okay, thanks.
You're welcome. All righty. Well, we're going to go ahead and move on to the cash flow projections. So what are they and why do we need them? So real easy, it's going to show how much money is going to be coming in and how much money is going to be going out. So you know what your net profit is or your net loss. So it is a living document. You'll see this big scary spreadsheet here. We're going to fill it out in just a few minutes and you'll see how easy it is. But as a living document, it's going to change over the life of the business. And not only will your projections not be 100% accurate, odds are the majority of these cells are not going to be what you end up, paying or earning, and that is okay. You want to be realistic. Even though you know your business is going to make $3 billion in the first year, if you put that on a loan application, it's going to scare the heck out of the lender. So what you want to show is that in the worst case scenario, you can do well. We had a person who made homemade wedding invitations. They were beautiful. One person shop, $1,000 per wedding. Their projection said we have 10,000 weddings a year in Maryland. We're going to make $10 million a year. Well, we know that's impossible. You can't do all 10,000 as a one-person shop. Not everybody has wedding invitations. Not everybody has $1,000 to spend on wedding invitations. So we said, show us that you can do it with 5 or 10 a month. And then if you do more than that's just great. You want to include all of your streams of income and all of your expenses. We'll be doing that, but you really want to make sure that you're breaking out things as much detail as possible because this document will be more useful to you if you do. So when you're breaking out income as a restaurant, you might break out dine-in, carry-out, or catering, or you might break it out food, liquor, and merchandise. Because if you open a restaurant thinking you're going to do 70% food and 30% liquor, and it's more 60-40, if you see where you thought you were going to be, you can have an idea if it's the issue is that your food program is weak, or if the positive is that your drink program is strong and you can make your adjustments that way. You also want to think about, do your sales change month to month? If you're a landscaper, you're probably going to make a different amount of money in June than you do in December. And we also want to make sure that you're paying yourself. So what do we need to do a cash flows? Well, why do we need them? I'm sorry. First of all, they're required for the SBA and all CDFI loans and really, really most for-profit bank loans as well. It's a great planning tool. It shows you a difference between, if you pull in $5 million a week and you're spending $6 million a week, you're not making money. So it shows you the difference between income and cash flow. It's just good governance, and it shows you when you can start taking money out of your business. So what you'll need to fill them out as a template. We are happy to email ours to everybody here. You need to know how much you have in the bank for the business, and it's fine if that number is 0. You want to know what all your income projections are going to be. How much money do you think you're going to be making in month 1? How much do you think you're going to be making a year from now? How much do you think you're going to be making 2 years from now? So that we can have a good growth there. All of your expenses, again, broken out. You want to make sure that you show your payroll taxes. One thing that almost everybody forgets to do is put their loan as income and their loan payments as expenses. So make sure you have that. And then you want to know your inventory cost. If I'm selling a jar of pickles for $10 and it costs me $3 to make it, I know I've got a 30% inventory cost. So you want to understand those things about your business. So now we're going to go ahead and create the cash flows. Before I get that started, are there any questions on just the cash flow basics? All right, it doesn't look like there are, so we're going to go ahead and we're going to pull up the cash flow spreadsheet. We have our own template. You can use it or not. So, if you got something that you feel is better, go ahead and do that. So this is our template. So I'm just going to fill it out completely. So this is for my fake business, Nick's Dills. All righty. So next you'll notice these dates are wrong. So, if I'm applying, it's already April. So if I'm applying in May, I won't get my money until June. So I'm going to have that be June 25 as my first one. So now we're going to talk about different streams of income for my business. So I'm going to be selling at farmers markets. I'm going to be selling wholesale to restaurants. And I'm going to be selling online. And we're going to be doing this as a startup business. I'm going to be asking for a $15,000 loan. Then we look down at these different expenses. We're going to know our inventory, our wages, if we've got to pay for trash, office supplies, all of these things, we will go through them. These are sort of the variable expenses. And then down here, we've got the more stable expenses or things like escrow. So we'll know what our loan payment is, but we'll go back up and start with the fun part, which is the money coming in. So I'm going to start with $0. I got nothing in the bank to start this. Pickles take a little bit to make. So, I'm not making any money in month 1. But then, in July, the farmers markets are kicking. I'm in Baltimore City. I've got the 33rd Street Market and the 81 Market, or 83 Market. So I've got 2 days each week, which are both weekend days to make money. So in the first month, I'll probably make about $300 per market. So that's 600 per week. Let's say 4 weeks, we're going to do $2,400. I'm not going to have time to go to restaurants and sell it yet, but I opened up a business and my family's going to help me out and buy some pickles online. So by August, the tourists are in town. These are nice things you can bring back. There's a little bit word of mouth. So we're going to make a little bit more each farmer's market. So, if we made $400 at each market, that's $800 a week and $3,200 a month. We're going to get a little bit more money coming in from the online, so maybe we'll bring that up to $700. At the first month in the market, I'll probably meet a chef who might be interested in buying our pickles. We'll do that for $250 a month. So we're going to continue to grow at that same rate. So 800 more than 3,200 is 4,000. It'll still be nice in October. It's going to get a little bit colder in November, but the holidays are coming. So I'll do a smaller increase. The markets are both still open in December. The holidays are really kicking. Pickles are something that can be used year round. I've maybe been doing some advertising. So I'm going to have a pretty big jump that month, knowing that I'm going down to one farmer's market in January, and that's the where people are spending the least amount of money. So that's going to come down significantly. I think we're going to be back down, to $2,400 for the month. It's February, there's Valentine's Day, but there's not a lot going on. So maybe a little increase to $3,000 a month. March, the weather starts to get a little nicer. People are going out to the farmers markets. So I'll bring that up to $5,000 a month. April, still down to the one market, but it's really beautiful out. So I'll probably make $6,000 there that month. And then in May, both markets are open. It's beautiful out. So there's going to be a big jump to $12,000. Then my wholesale. Well, I'm just going to add one restaurant a month at $250. Alrighty. And then my online sales, I think, are going to be pretty stagnant at $700 a month. So you'll see here, I have brought in, this is including the $15,000 loan, $91,550, but I haven't spent any money yet. So inventory, I have no idea personally how much it costs to make pickles, but I'm going to assume that it's 33%. So I'm going to make a sum. I'm going to, as the first income is on line C13, this C20 becomes C13. Little semicolon. Take that out to the line before your loan. So that's C17. And then we're going to multiply that by, what did I say, 33%. Of course, I made $0 in month one, so that's a 0. But you'll see here that it does the math for you. As far as wages, I will need a little bit of help. If we figure, $15 an hour, 10 hours a weekend, so that's 150. 4 weekends for that month is $600. Normally, these little guys would be contractors, but I'm going to keep the payroll expense in just for the purpose of this cash flow. We assume at 10%. So month two, I'm making a little bit more money. I might want to work a little bit less, so I'm going to put $900 in. Probably keep that through October. Maybe build it up a little bit in November and December just because of business, and I might not be able to make all the weekends. Just going to have the one farmer's market in January and February. Maybe a little bit more time in March, a little bit more time in April, and then we're going to be going gangbusters again in May. So now I've got my payroll expenses in. So now we're going to talk about outside services. So there's a lot of food halls in Maryland and Baltimore where you can rent a space in the evening. It takes care of all the trash and utilities. So there's not going to be any money in those right now. Office supplies. So that's for like invoices, receipts, things like that. I think maybe that'll cost me $600 for the year. So I'm going to make that $50 on the month. Subscriptions, I don't think there's a National Pickling magazine I need to subscribe to, so I'm not going to join that. I don't need a storage space for the small business. Oh, and then we can talk about some advertising. So that's my total marketing cost. It's probably going to be a little bit upfront to get the name out. So maybe $250 for the first 2 months, bring it down to $150 for the second 2 months, bring it down 100 for the next two. And then I think at that point in time, just some general social media advertising will be enough. So $50 a month. Distribution, if somebody's buying my stuff online, they're paying their shipping costs, so I'm not going to worry about that. Accounting and lawyer. So even if you don't have one, you want to be saving some money for these folks for if you do need them. I recommend $50 a month if you've got a simple business, but I would leave that up to your judgment on your own cash flows. Rent. So I have a full-time day job. I'm only going to be pickling in the evenings. So that's a $500 a month for that rental. So we'll just keep that the same rate for the entire year. I will have a separate telephone. I'll add an extra line from on my own phone line. So let's just say that's $50 for the per month. So like I said, the utilities are already included. Now I've got insurance. So I am dealing with food. So, let's assume that it's $2,400 for the year or $200 a month. And then my only licensing fees are my $300 annual state fee because the health department stuff is taken through the place I rent. So now my loan payment. So this is not a real number, but let's say that this will be about a $300 a month loan payment. I have not taken out any other loans for this business as it's brand new and $15,000 is enough to start it up. So to buy all of my equipment and my paper will be $12,000. I've asked for $3,000. That will just be what's called working capital, a buffer as I'm getting started. And I've got my full-time job. I don't need to be pulling money out of this business yet. So as you'll see, we start off, with just a little bit of money in the bank. And at the end of each month, it's getting a little bit bigger, a little bit bigger. It continues to grow. And then at the end of the month, I've got $29,283 in the bank. So now I'm going to take this whole month and I'm going to paste it over year 2. I'm then going to, before I forget, change this date to 26. Go back down here at the bottom and see that I've got $29,283 to start with. $29,283. I am then going to think that $12,000 a month is my cap for the nice weather. Probably go down to $10,000 in December. And then 5,000, 7,000, 8,000, 9,000, 12,000. Let's see, I started off at 2,500. I think that that's a good number of restaurants to have just a stagnant at year 2. But the word has gotten out a bit about my pickles nationally. So now I'm selling $1,000 a month worth of pickles. I'm doing okay. I don't need another loan. Let's talk about money. Well, we're going to be doing probably, I think it's safe to say, just $1,200 a month year round is a good average. All of these other expenses are going to stay the same, most likely. Rent might go up to $550. And we're going to pay the loan in these months here. We, of course, aren't buying new pickling equipment, but I'm going to put $7,500 in reserve escrow in case one of my pickling machine breaks, I can get it fixed pretty quickly. So now at the end of the year, I've got almost $100,000 in the bank. So I think it is safe to start paying myself, let's say $2,000 a month to supplement my income at my regular job. So that's an extra 24,000, and I've got $75,000 in the bank. So this business, if these numbers were correct, would be a positive cash flow business, and would have a decent chance, you know, as long as these numbers were verifiable, that there would be a loan given for that one. So I am going to real quick save this as Nick's Dills cash flow for 23, 25. And then that way we, if you request it, we can get you a blank copy and this filled out copy. So now we're going to go ahead and bring back the PowerPoint. While I'm doing that, are there any questions about filling out the cash flows?
Yes, please. It's Blessing here again. Sorry.
Sure.
Regarding the payroll and taxes, I'm sorry. I think I missed the formula. You did a formula, and I'm not sure how because we're quite new to the country. So,
Oh,
if you
sure, sure. So we just assume 10%. So the formula is just 10% of the cell above it.
sorry, 10% of the.
Of the wages. So that's
Oh,
the payroll taxes. So that's not the taxes that the employee pays. That's sort of our payroll taxes, our workman's comp, that kind of thing.
okay, fantastic. Thank you.
You're welcome. We got something in the chat. Yep. We can definitely get you copies of the cash flows. And so now we're going to bring this to wrap it up a bit. Just having some technical stuff. Here we are. So there are a few things to remember that are some pitfalls that I've seen people do. Number one, not bringing that year-end amount up to the first cell in the second year. So it looks like you're starting at $0 again when you really could be starting with $30,000 or $300,000. Taking too much or too little of an owner's draw, we're going to want to make sure that you as a person can afford your home, your clothes, your food, and a little bit of fun. Remember that accountants, legal, and marketing really are investments in your business. If you have a negative cash flow for too long, you know, your business won't be successful. So we want to figure out what we can do to mitigate that. Make sure to put your loan and loan payments in and make sure that you've got realistic expectations. So you've got your business plan, you've got your cash flows, you've turned everything in, and now you're ready to go and you're ready to apply for the loan. So how do we do this? It's pretty simple. All CDFIs work similarly. The way it works is you do some kind of intake. Ours is online. Other folks might be on paper. You have a business application. Again, ours is online and others might be on paper. And then what we call a personal information supplement, other folks might call it a personal financial statement or something like that. Because these loans are personally guaranteed, we're going to want to know stuff about you. So that's going to be your employment history, your assets and liabilities, your monthly expenses. Your supporting documents. So if you are a new business, anything that is like the profit and loss statements will, of course, not be required. But if you've been around, you know, for a year, we're going to want to see a full year of those things, and 2 years or more, we're going to want to see 2 years. We want to see some sort of documentation that you've been turned down for a loan. That could be just having a conversation with the bank and them telling you that, you know, that they don't do startup loans. Again, the cash flows. It's also good to know with these cash flow projections that we are happy to do a one-on-one Zoom with you to complete the cash flows with you. Profit and loss statements for 2 years, your most recent quarterly balance sheet if you're open, 2 years of business federal taxes. Everybody who owns 20% or more of the business will have to submit 2 years of personal taxes and 3 months of personal bank statements. We'll also need 3 months of business bank statements, assuming that your bank account has been around for that long. If you are a new business, open up that bank account now, even if it's a $0 statement. It's good for us to see that. Everything else is going to be optional. So that can be things like reference letters, quotes, licenses, copies of leases, you know, any type of marketing you have, your website, you know, your social media, anything like that. And then anything else that's relevant to your business. Use all that stuff to tell your story, and then, you know, we'll figure out if some of the stuff doesn't need to go in front of the committee. Eligibility criteria. So again, you need to have been turned down by another lender, but like we said, that you don't necessarily have to have gone through the whole process. We're going to want to see your business plan. We're going to want to see that you have experience in the field or a mentor. We're going to want to see a realistic cash flow. These loans mostly do require some sort of collateral. So the strength of the collateral, you know, of course, a fully owned home is the best, but we can get very, very flexible. One thing we haven't talked about yet is credit. We do not have a minimum credit score. We're looking at the last year, 12 to 24 months, looking for missed payments, past due amounts, things like that. The only two true disqualifiers are a bankruptcy discharged in the last 24 months or a tax debt without a payment plan. We're also going to want to know the general economic conditions for this venture. What does that mean? That means, is this a good time to be opening up this kind of business in your area? Or it could mean if you're opening up the seventh pizza shop on a block, how are you going to compete with everybody else? And then are you able to get back in the workforce to repay the loan if the business is not successful? Remember, these loans are personally guaranteed. So we've got two loan products right now, so I'll go through them. The first is our small business loans. If your business is 2 years old or newer, you are eligible for up to $35,000. If your business is older than 2 years old, then you're eligible for up to $150,000. The terms go 1 to 10 years. A $50,000 loan is usually 6-ish years. Anything over 100 is 10. The 35,000s tend to go out about 4 or 5 years. Our interest rates can go 6 to 12%. Generally, most of these loans are going out around 8%. We do require the collateral. If you are using a house, we will need an appraisal that's 12 months old or newer, but don't get that until you've been approved for the loan. Again, all owners with 20% or more interest must personally guarantee the loan. If you've got a number of owners and nobody owns 20%, we're going to want to see 3 or 4 folks guarantee the loan. There is an application fee. All of the services up to this point are completely free, but once you do apply, there is a $100 application fee and then $25 per owner for a credit report. Again, we do TransUnion and we do soft pools. There are closing costs. They're taken out of the loan proceeds. Usually a $50,000 loan is going out at about $48,250 or so. We take automatic payments from your checking account that you give us every month. If you know that you are not going to be able to make a payment, let us know a week ahead of time or so. I mean, at least, and we'll be able to figure something out. We can do interest only, deferred payments, or even restructure the loan. There are no penalties for prepayments as long as your loan is 30 days old. So, you know, if you do really well, get a big government contract, you can just pay off that loan. We will visit you either in person or virtually twice a year while you have that loan out with us. We'll talk about how your business is doing and let you know about any resources that we have for you. And then the big questions, is my business eligible and what can it be used for? So we're able to do most businesses in our service area with a few exceptions. The first is traditional sin industry stuff, 100% alcohol, adult bookstores, things like that. And then the only other thing is that if you are in the business of buying property as an investment, either to sell or rent, if you're not occupying 51% of the space, we can't pay for the acquisition or rehab of those properties. We can pay things like building out your office, trucks, and reusable equipment. So you think jackhammer, yes, drywall, no, you know, that kind of thing. What can the funds be used for? Any small business expense, you know, salaries, build out, furniture, equipment, utilities. The only thing is that rent. The only thing is that if you are a home-based business, we cannot pay your mortgage, your rent, or your utilities. So our other loan is called our credit builder loan. This is for folks who either have no credit, maybe have some credit issues in the past, or just need a small amount of money quickly because there's something like a tree root growing through a pipe. These will be about a 2-year term. The interest rate is always 9%. We don't require collateral, but of course it's encouraged. Owners with 20% or more interest are still going to guarantee the loan, but the fees are much smaller. Everything else is the same. Oftentimes if somebody's been paying back for, a year, 18 months on this loan and they need more, we're able to do a bigger loan, and wrap this one into that one. Not guaranteed, but it's always a possibility. Um, so before I do the final wrap up of this, are there any questions about access to capital and the types of loans that we offer? We go into the chat.
Yes, hi,
Yeah.
bless you. Regarding the referees, because we're quite new to the country, what if we can't get guarantors? Is there any other way of going about it, or should that be a one-to-one chat?
Yeah, that should be a one-to-one chat. We can get pretty flexible with that. And we've worked with a lot of folks who are new to the country, so this is not new to us.
Okay, thank you.
You're welcome. How do you sign up for a one-on-one Zoom for cash flows? So if you have not already, go to marylandcapital.org. On the top right-hand side, there's a Get Started Here. That is our client intake form. When you fill that out, you will be contacted to somebody on your side of the Bay Bridge who will be your business consultant, and you can sign up for the one-on-one cash flows through them. Alrighty, so there's a really good thing about starting a small business in Maryland, and that is that there are more free resources for your small business in Maryland than just about anywhere else in the country. It's because we're so close to DC and we've got so much military stuff around here. There's just a wealth of resources. And we recommend that you talk to as many as possible, ask us all the same questions, find the folks you're comfortable with, and work with them. So you've got us. Almost all county libraries will have some sort of business center. Each county will have an economic development organization. Look for your local Chamber of Commerce or the Maryland Department of Commerce. The SBA has small business development centers, SBDCs, all throughout the state that offer free consulting. There's other nonprofits like Operation Hope that offer accelerator type classroom sessions. The SBA is there to help you out. The SCORE is an SBA program that's the senior core of retired executives who might be able to get you with a mentor in your field. Talk to your local universities. We work a lot with Salisbury and Morgan State, and they don't just help students and alumni, they help everybody. And then your local organizations. You want to, join your Main Street, join your Rotary, join your downtown partnership. So 5 things, before we wrap up that I like to say at the end of every presentation is number 1, while you're building your business, keep your job. It's going to look good to your lenders and it's going to help your household income. Number 2, unless you are an accountant, and honestly, even if you are an accountant, you need an accountant. As you're growing your business, you're going to get in the weeds and you're going to be lost sometimes. You may forget to file some things, and then that way you become out of good standing with the state, which can be some fees and also make you ineligible for things like our loans. Ask for help. You're already doing it. Don't stop. Keep your money in the bank. So as you're applying for a business loan, don't apply for a home loan or new credit cards or anything like that. And then remember that no business is an island. People shop at small businesses because they are part of their community. So be a part of your community. Give to local charities. Support your local kids' softball team. Things like that. But be careful now. We're living in a political environment. So you want to give to things that everybody can get behind. Things like kids, food banks, pets, veterans, things like that. It's the reason why when you go into a bar, they've got sports on instead of the news, because if you had Fox or MSNBC on, you'd be turning away half of your possible clientele. So we've got a lot of more free webinars coming up. These are just a few of those. I'm going to be doing a first steps in starting your own business on May 21st. But we've got things about funding, marketing, and then special resources for veteran-owned small businesses. So if they apply to you, go ahead and sign up. And with that, I'll open it up for any other questions. All righty. Well, I always think of my best questions when these things end, so make sure to take down my email address, nrudolph@marylandcapital.org. Think Christmas, Nick Rudolph, it's hard to forget. And with that, we'll still have about 14 minutes left on our lunch breaks, everybody, so there's some time to relax and enjoy this beautiful weather. I hope you have a wonderful day. If you need slides from this or any of the documents we discussed, just feel free to email me. I thank you, and I hope you have a great rest of your day.
Thanks, Nick. That was very helpful. Thank you.
Thank you.
Thanks. Bye.